Hi everyone, welcome into the free UK stocks I'm buying December 2020 edition. This is the most popular video series that I do run on the channel. Always seems to bring in some new subscribers as well, so if you are new, make sure you subscribe. You guys that are here all the time, you guys smash the like button. A good target for this video series is always about 300 likes, so you guys see if you can do it. And yeah, this is where I talk about the free UK stocks I'm looking to buy in the month of December 2020, the month that's coming up. And in general, the UK stock market has been on a very good run, so I am a little bit hesitant about how much I do buy and kind of hoping for a little bit of a pullback. Something of a, like a 5% dip would be something really good. But yeah, these are a few opportunities that I am noticing, which are these companies, which I'll be talking about, and the ones that I'm looking to buy. So yeah, we'll take a look at these companies and the companies that I'm looking to buy. Now, the video series that I normally run is free UK stocks to buy, but there's actually a fourth stock in today's episode, so we'll call it a bonus stock. I didn't want to call it 4 UK stocks to buy because it just ruins the video series that I've run on the channel for like the last kind of few years. So I thought, let's keep it in the video series title. Sounds a little bit better as well, free UK stocks rather than 4. So yeah, we'll call it free UK stocks and a bonus stock. So we'll take a look. So the first one up is Keyword Studios, and I actually got this one from another YouTuber, which you might know is Emmanuel Finance. He's talked about this on his channel, and I thought I'll have a look. And much like him, I am liking what I'm seeing with this company. And basically what this company does is it helps developers that develop games, so like your Activisions, like your Take-Two, Apple, Microsoft. And basically when these guys don't have the people available or don't have enough work to have these guys on their full-time payroll, so let's just say, for example, it was designing the background of a game or something, they don't have people that can do that job full-time, they go to Keyword Studios and they kind of take them on for a little bit of a short period and get them to design some of these games. So you can see how it works very well for these game developers that don't have full-time jobs or the current people in place to be doing this, and they go to Keyword Studios and they help them out. So you can see it's very good. They're going to be involved in a growing industry, that gaming industry, which is massive. Currently trading around about £23, so a little bit more of an expensive UK stock really compared to some of them. And it's a pretty decent sized company as well at 1.7 billion market cap. Now there's only one negative that kind of puts me off this company, which is the 128p ratio. Yeah, that's quite a lot, isn't it? 128. I mean, that's the only thing. Like, everything else with this company is really positive. The only thing is, like, and when I get onto the growth as well, the growth kind of doesn't, justify this P ratio. So it's the only little negative that I do have. I would like it to be a bit more of a cheaper P ratio, but everything else is great with the company. Like, if that P ratio could be a little bit lower, I'd buy it. And it's the only reason why I haven't bought this one yet, but it's definitely one that I am considering at the moment. Now, when we look at the revenue has grown at just above about a 10% rate. The profit is growing about a 30% rate, which is really good, because when you think about that profit growing at 30%, that will help that P ratio come down to a bit more of a better level for a company growing at 10% revenue. So yeah, I mean, it's hard to justify the P ratio. I mean, the profit will help bring it down, the revenue is good, but maybe, if it was double digits, it would be a lot better. So that's the only thing holding me off buying it, but everything else is great. You look at the balance sheet, it's got a very clean balance sheet, only got 218k in debt, 101 million in cash, which is, fantastic amount of cash to be there. I mean, it's quite weird to see that it only has 218k in debt with that much cash. You'd be like, just pay the debt off, and you still have over 100 million in cash. But yeah, very, very strong balance sheet. I am liking this one, so I don't know. I think it's just the valuation that's putting me off. But apart from that, the growth's good, the industry's good. Look at the balance sheet. Balance sheet's fantastic. So might buy it. I'll see what happens. Number 2 is a company that I currently own in my portfolio, but it's one of those that I'm like, I should have bought more of when I did buy it. And this company is called Rightmove, ticker symbol RMV. Basically, this company advertises property, and it is the market leader in this industry by having 83% control of the market. And I think everyone knows Rightmove. Like, if you're going to buy a house, you're going to Rightmove. You're going to go on Rightmove and try to find your house, and that's why it's done so well. So many people or estate agents that are selling houses need to cough up to get their houses that they're selling up on that Rightmove list. Estate agents pride themselves on going like, oh, we advertise on Rightmove. It's a key thing for the property market. They control it very well, and I can't see anyone knocking them off this area anytime soon. Currently it is at £6.25 as recording this video, has a decent market cap size of 5.4 billion, and this P ratio is 40. So it's much better than what we saw with Keyword Studios, for example. A lot more of a realistic P ratio. Obviously it's still a little bit high, but when we look at the balance sheet and the growth, you kind of justify that P ratio. And like I say, it's a company I own, but I was always like, I actually should have bought more of this when I went to go buy some more. I'm currently up about 15% on this stock, but it's come back recently and I was like, is this the time now to just average up, swallow my pride a little bit, even though I'm up 15%, and just, start averaging up, because it's a great growth company on the UK side of it. And we don't have too many amazing, great growth companies like this one that is now on a bit of a discount. You look at the profit growth, revenue growth, it grows about a 10% rate, so that's fantastic profit growth, fantastic revenue growth. You have a look at the balance sheet, there's zero debt on there, so that means zero debt to equity. Also has a pretty strong cash amount of 50 million, so it's got plenty of cash there as well. And also it does pay a little bit of a dividend, which is a 1.2% dividend yield, which is a very low payout rate as well. So I can see them pretty much upping this dividend yield over the next few years as well. But yeah, I mean, great growth. You can see it just carry on being dominant, and yeah, a little bit of a dividend as well. So number 2 is Rightmove. Number 3 is S4 Capital. Now, I actually got told about this company a few months ago, and I was like, it's actually really good. I should actually buy it. And I got told about it on my Patrons group. So the link is in the description if you want to join that group. But one of the members was like, have a look at S4 Capital. I looked, so I was like, this company is pretty good. And I just didn't go anywhere with it. And now I'm like, I should have really bought it because it's done really well since then as well. But I am very tempted to buy this growth company because when you look at the growth, it's absolutely amazing, and I could see this being a future FTSE stock. It's currently only about 2 years old, so when we look at the valuation, it's like a 2.8 billion, I think, market cap in 2 years, which is absolutely crazy. Basically, it's a digital marketing and advertising company, and it has massive amounts of clients and big names as well. Some of them clients you will recognise: Google, Facebook, Netflix, Beyond Meats. Got some massive amounts of clients on it, and it's done phenomenal. Currently trading about £5.34, like I say, 2.8 billion market cap, and it's a pretty new company as well. Now, I thought 2.8 billion for a company that's 2 years old is, it is a little bit expensive, but when you actually start looking at the revenue growth and how quick this revenue is growing, like about 50% rate, this revenue is going up absolutely huge. It won't be long before you can see this company actually justifies that valuation with this growth. I can't remember seeing a company ever in the UK of this sort of market cap size at this amount of growth that's also profitable and or pretty much near profitable and will be profitable in the next few years, and also is growing that profit at major rates as well. So yeah, I mean, as well, when you look on the balance sheet side of it as well, it's pretty decent on the balance sheet side of it as well. So yeah, I mean, a basic growth company with that balance sheet, and I'm just tempted because if it can carry on this growth at this sort of valuation, you can actually kind of justify it really. So yeah, number 3 is S4 Capital. And number 4, or our bonus stock we'll call it, is Money Supermarket. So if you guys have heard talk about this one, it is starting to catch a bit of momentum now on the YouTube UK stock market scene. A few people are starting to recommend this one, and I am certainly tempted into this one as well. So you might know this one as a price comparison site for insurance and many other things in that sort of industry. And it has been hurt a little bit because of COVID, holiday insurance is not being taken out and everything like that, which should have come back pretty strong in the next year really, I think 2021. The only little problem I have about this one is that I'm a little bit worried about people coming into this industry now. I think it's getting a little bit more crowded than what it used to be, that's the only thing that I kind of put in, how is this company going to carry on developing? I guess that's the only little problem that I have with it, and why I haven't pulled the trigger exactly yet. But the ticker symbol for this one is MONY. Trading about 1.3 billion market cap, so decent size. Trading about £2.40-ish, £2.40p for a share. And it's been downtrending. The stock price has been downtrending for about a year and a half now, since it got to about £4. So it is on a very big discount, which is the really tempting thing to jump into this. The only thing you got to be careful of is that downtrend, and don't try and catch that falling knife, because it could easily go down from here. But if you can be careful and average in, I'm sure you can get a decent average. But yeah, I think that's the great thing. It's been doing some decent growth, and it's been downtrending way before COVID came out. You have a look on the valuation side of it, trading at P ratio of about 15, you know, it's so cheap, especially for a company that pulls out the growth that it does do. So I guess that's really attractive on the valuation side of it. There is some COVID numbers in here, but normally the growth is high single or low double digit profit and revenue. So it's a decent growing company really. For a 15p ratio at that sort of growth is not normally normal. You know, we were talking this sort of company to be a, you know, probably a 30p ratio. So yeah, definitely when you look at the growth side of it and the valuation, you're like, yeah, that's pretty cheap to be fair. You look at the balance sheet, it's not as strong as the other three, but at the same time, it's still pretty decent. 2.5% debt to equity ratio. It does have a little bit more debt at 3.1 million, and it has cash of 12.5 million. So, I mean, it could easily pay the debt off, to be fair. I mean, it'd probably just leave it because it'll take a chunk of that cash out, and obviously, you know, it might be a really low interest rate. So, yeah, it does have, I'd say on the balance sheet front, obviously there's not as much cash, there's a little bit more debt there, but it's still a fantastic balance sheet. Let's be right about that. And the great thing about this is a bit like my Legal and General position and my Airtel Africa position, currently pays a bit of a dividend. So this dividend's about 4%. It could, if it carries on dropping, go to about a 5% dividend yield, which would be really interesting because then we'd be looking at probably a little bit of a share price gain like Airtel Africa, as well as picking up that little bit of a dividend. You know, 4 or 5% dividend yield would be very, very interesting. So I'm a little bit torn on this one. I'm deciding whether or not to go into it, but it is very tempting to be another one of those stocks where you get a bit of share price gain while also picking a bit of a good dividend up there as well. So those are the 3 UK stocks I'm looking to buy in this month, or you could say 3 stocks and a bonus stock, I guess. I still haven't got the name for it, I guess. But yeah, those are the 4 companies really that I'm looking to maybe buy. Overall, I've got to say that Keyword Studios is probably the one that I probably won't buy just because of that valuation that you're paying up for and the growth side of it. I mean, the profit is amazing and the balance sheet is amazing, but I just think that P ratio is a little too high, but nevertheless a fantastic company. I'll see what happens. Rightmove is one that I've been wanting to buy for so long, but I've just been up on my position and my pride's kicked in about averaging up, but now I've just got to the point where I'm like, I might just average up now and 15% up and buy that one. So, I mean, by the time this video goes up, I might have bought Rightmove. We'll see what exactly happens. But yeah, definitely one that's very tempting me out on the whole list itself. And then looking at S4 Capital is one that I'm looking and thinking, this is a major growth company. You know, the growth that it's putting in, we don't have many of these on the UK front. Decent market valuation already as well. And I don't normally like buying at 52-week highs, but I'm thinking, is this company actually going to dip? Maybe not. You know, that growth it's putting in is phenomenal. Probably one of the best out there for that market valuation side of it as well. So I'm thinking I might just go in and buy this one because I don't know if there will be a pullback, and if there is a pullback, it probably won't be that much, and I might be able to average in a little bit. So yeah, I'm thinking that I might go buy S4 Capital because of the amazing growth it has in front of it, and you know, the potential of where it could go. With Money Supermarket, it's probably the one that I'm most undecided on. I want you guys to let me know what you think on that one. I'm looking at the company thinking, yeah, it's been hit by COVID, not as many like holiday insurances out there, but that should sort itself out. The growth's quite good when you look at that valuation, a P of, you know, like 15. I'm thinking great growth, okay balance sheet, or pretty good balance sheet, and you know, the valuation, like, it's probably worth a punt here and pick up that little dividend yield as well. So I'm just a bit nervous that there's a lot more competition coming in this area now, and thinking, can it still put in that amount of growth there without developing that much now? And I'm like, that's the other thing that's put me off. But I'm thinking this could be worth a punt. I'm still very undecided really. So yeah, that's one that I'm still very 50-50 on. You know, don't be surprised if I do buy it, but I've still not decided on that one. So overall, those are the free in a bonus stock UK stocks to buy December 2020 edition. Hope you enjoyed it. Smash the like button, subscribe if you're new around here and you made it all the way to the end, and I'll see you in the next video.